82% of small businesses fail within the first 5 years. The majority due to poor cash flow management and lack of understanding of it. Have you ever had to delay a payment until your next paycheck? If this sounds familiar, you have already dealt with cash flow management. In this lesson, we'll have a closer look at why cash is king and why cash is relevant to the hospitality industry. Have you ever heard the expression cash is king? Cash flow is one of the fundamental, if not critical, aspects in any business, especially hospitality. Cash flow management is a process of tracking and managing how much money is flowing in and out of your business. If a business takes in more cash than it sends out, then the business has a positive cash flow. If a business takes in less cash than it sends out, then the business has a negative cash flow. It is also a sign of the health of the business and how successful it is at generating revenue. One of the most important skills for business owners and leaders is the ability to forecast and manage cash flow. A business may continue to trade if it isn't profitable, but it won't survive long without enough cash to meet its needs. Did you know there is an important difference between profit and cash? Profit is revenue less all expenses, while cash is what covers your operational costs. You can generate enough cash to operate while not turning a profit, but you certainly will not be able to operate without cash. Imagine this. Your restaurant sells edamame beans for $6 a portion. The profit margin is 92% or $5.50 because the production cost is low. You also sell Wagyu beef with a selling price of $58 a portion. The cost is $29, which makes profit margin 50%. But the profit is $29. When you compare the cash that comes from selling both dishes, you can see that the beef dish brings in more cash to improve cash flow. The ability to generate cash is at times more important than the ability to generate profit. It is also worth mentioning that even successful companies without cash may find themselves in a tricky position. Cash is truly king. If you don't manage your money or manage it poorly, it can be easy to keep spending unaware of what you have actually spent, and you end up paying for it in more ways than one. Imagine your restaurant is fully booked, but when it comes to paying your supplies, there isn't enough to cover the bills. This may directly impact your business's ability to provide services or goods. Keep in mind that your supplies also depend on cash flow. So, base case scenario, you could end up with some suppliers refusing working with you. Worst case, not being able to continue operations, becoming insolvent. Or imagine your business has to pay back invested, but the cash isn't there. Not only will you be unhappy, but you may end up paying more because of late payment penalties and/or interest. The hospitality industry has many challenges related to cash flow, like payment terms, fixed assets, high labor costs, and the diversity of suppliers. We have to manage cash as it comes in and carefully plan for when it goes out. Think of your local cafe. Each time you buy a latte, they receive your cash. With the cash received, they have to pay labor, rent, supplies, and so on, and all at different times. Cash flow is like juggling multiple balls in the air at once. But don't worry, it can be achieved with focused, strict controls, timely information, setting targets, forecasts, and budgets. A simple rule for cash flow management is that your outflows should never exceed your inflows. Now over to you. Let's start with an activity to look at your personal cash flow. First, record what inflows of cash deposited into your bank account for the previous 2 months. And for the same period of time, record the outflows from your bank account. Now, did your inflow exceed your outflow or the other way around? This is a basic snapshot of your cash flow for this period of time. Lastly, here are the 3 insights to remember. Cash flow management is the process of managing cash inflows and outflows. Not managing your cash flow effectively could risk the company going out of business. A simple cash flow management rule is your outflows should not exceed your inflows.